After years of India having expressed discomfort with the cryptocurrency ecosystem, last Friday, Finance Minister Nirmala Sitharaman said that countries would have to prepare to engage with stablecoins, a form of cryptocurrency, whether they welcome the change or not. Why? And why now? Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. Did you know that legend has it that US gangster Al Capone used laundromats as a front to hide the origins of his money, and that ever since authorities have been fighting to prevent the laundering of money by criminals? Be that as it may, in this episode we will not learn just about stablecoins and how they work, but also why there are so many loud voices for and against the use of this form of cryptocurrency. Last week, Ms. Sitharaman said that innovations like stablecoins are transforming the landscape of money and capital flows. These shifts may force nations to adapt to new monetary architectures or risk exclusion. The Ministry of Finance has for long voiced reservations about private cryptocurrencies or virtual digital assets as they are called. India has not yet legalized these currencies in terms of regulation, but it does tax transactions that involve such currencies. The RBI, on the other hand, has sought to ban such assets outright while simultaneously launching pilot projects of its own central bank digital currency or the CBDC. CBDCs are cryptocurrencies issued by central banks and have the same legal backing as official currency. Only last month, former RBI Executive Director G. Padmanabhan was reported in the media as urging the government to come out with explicit guidelines for stablecoins, failing which uncertainty would abound and that would hinder innovation in his view. Now, what is a stablecoin? A stablecoin is a form of cryptocurrency that is pegged to another reliable asset, such as the US dollar or gold. The aim here is to avoid the volatility in price of a cryptocurrency, in this case stablecoin, volatility that is seen in other such currencies, such as Bitcoin. Bitcoin is not pegged to any other asset. The Bitcoin value is only as high or low as the next buyer is willing to purchase it for. So you will see wild swings in the prices of Bitcoin. It can swing as much as 10% in a matter of few hours. So investors sometimes tend to lose a lot of money by betting on it. But with a stable coin, for instance, if it's pegged to the US dollar in a 1:1 ratio, and if you own one stable coin and if you sell it, that's all you will get. The value is $1. A report by JP Morgan Global Research in September this year indicated that the US dollar-denominated stablecoin market, which makes up about 99% of the global stablecoin market, has grown to $225 billion, accounting for roughly 7% of the broader $3 trillion crypto ecosystem. In a recent article, the International Monetary Fund explained how the stablecoin ecosystem works. Assume you want to pay an amount to a friend. If you tap the send button on your phone app, previous verification of both your identities, yours and your friends, is confirmed. A decentralized algorithm checks for suspicious transactions, suspicious activity, and the whole operation is completed all on a blockchain. Flagged transactions will be reported to law enforcement agencies, but the identity of the two parties, the sender and the receiver, can be revealed only by the use of a warrant or equivalent legal process. Now, what attraction will stablecoins have for the Indian market? Some estimates have it that there are more than 300 million stablecoin holders in India. It is said to be very easy to use and payments are instantaneous, be it for domestic or international transactions. But in India, and unique to India, is our UPI system on which sit your GPay, PhonePe, Amazon Pay and WhatsApp payment systems. It is so easy to use that whether it's your tea shop owner or your vegetable vendor who comes near your house using a push card, they all have QR codes displayed or are able to give you a simple 10-digit phone number to which you make your payment. So it is difficult to imagine a situation or a context where stablecoins will replace the UPI system. By inference, the next question arises then, would stablecoins be useful for international transactions? In that context, if the RBI rolls out its own digital currency fully across the country, and if it ties up with other nations that have their own digital currencies, then international transactions could also be easy and instantaneous. But it is clear that the RBI is not in a hurry to roll out fully its central bank digital currency, CBDC. As recently as yesterday, Deputy Governor of the RBI P. Ravi Shankar indicated the RBI is not in a rush, but that it is focused on adding more layers of use cases and programmability. In which case, stablecoins will find use in easy and instantaneous international payments, at least for the time being. Last month, Nobel laureate Jean Tirole wrote in The Economist that in theory, the reserves that a stablecoin issuer had, and stablecoin companies need to have a certain amount of reserve that is equivalent to the value of stablecoins that they were issuing. That he said that in theory, that these reserves could be audited by independent accounting firms that could verify these reserves, and that regulators could interpret the findings and do whatever enforcement is required. In practice, the author writes, full backing is not a sure thing. Tether, a stablecoin issuer, has been fined for misrepresenting its reserves, which have never been fully audited by an independent entity. Circle, another stablecoin issuer, had 8% of its reserves jeopardized by the collapse of Silicon Valley Bank. The author also issued a warning that stablecoin issuers always face the risk of collapse, and if such an event were to occur, governments would have to enter the picture to protect the fortunes of small savers and households. In a 2020 report, the Finance Action Task Force warned that so-called stablecoins shared the same potential risks of money laundering and terrorist financing as other virtual digit assets do, due to their potential for global reach, anonymity, and illicit layering of funds. The JP Morgan report that we referred to earlier in this episode indicates that stablecoins do have the potential to threaten financial stability in any economy. And how does this happen? It points to the significant run risks that stablecoins have. A run risk is when a large group of investors want to redeem their holdings all simultaneously. It points to the case of the collapse of Terra USD in May 2022. Terra USD is a stablecoin issuer. And it says that that case highlights how quickly a run can occur in an asset class that trades 24/7. The effects of a massive liquidation could spill over to other markets, destabilizing the traditional banking system, it warns. Such fears stem from the fact that even with stablecoins, large parts of the ecosystem still lie outside regulatory purview. Take, for example, an instance where you'd like to buy a house in India. You're based in India, you have a sister based in the US, and she'd like to part fund the transaction as a gift. So she transfers funds from her stablecoin wallet in the US to your stablecoin wallet in India. Till such time you choose to convert those funds into actual currency and bring it into the Indian banking system, there is no way to track the source of your funds. And that is what gives rise to fears on money laundering and so on. But there are still champions for this form of currency. And here's how they suggest this ecosystem should work. In an article earlier this month, the official Monetary and Financial Institutions Forum suggested something that the IMF article talked about too, a clearinghouse system much like those run by regulated entities for clearing bank checks. Similarly, a public blockchain should help clear transactions between stablecoin wallets of users. The users' bank accounts are linked to these wallets, and the users could choose to allow these funds to remain in the wallets or convert them into actual currency by bringing it into their savings bank account. That brings us to the Did You Know section we have for you in each episode, and here it goes. Did you know that US Treasury Secretary Scott Bessent is reported to have said earlier this year that we are going to keep the US dollar the dominant reserve currency in the world, and we will use stable coins to do that? And here's the quiz question for this week. Let's go back to the history of money. Where was the first coin mint located, and approximately how old is it estimated to be? And the answer to last week's question, the question was, what is the practice of cutting a hole in the skull called? The answer is trepanation. That's all we have for you folks in this episode. If you enjoyed what you saw, do not forget to like, share and subscribe. Until we meet again, have a wonderful time ahead.